Cautious trade on the street as bulls take a breather from the pullback rally. Autos, IT stocks see pressure while metals see some buying. The Nifty remains around the 20 DMA while the mid-cap index fares better today.
Big block trades in the market today. Gokuldas Exports sees almost 10% equity change hands with promoter entity Clear Wealth Consultancy selling half its stake. Home First Finance under pressure after 8.4% equity changes hands. A large venture capital fund is believed to be the seller.
And stocks in news today. Sequence Scientific sees a relief rally of 12% as the company backtracks on plans of acquiring Tineta Pharma, which was valued at 218 crores. Religare rallies 8% as the company completes an all-encompassing one-time settlement with its creditors.
A big capex boost powers Max Healthcare. The stock gains over 3% after CMD Abhay Soy tells CNBC-TV18 that the company will undertake a 4,500 crore capex to add 2,800 beds over the next 4 years. The capex will be funded via internal accruals.
And the Adani Group stocks are under pressure as promoter creates additional pledges in some of the group companies. Adani Transmission sees an increase of 0.76% in promoter pledges, and Adani Green sees promoter pledges rise by nearly 1%.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Sonia Shenoy. Well, it's turning out to be a session where it's definitely a lot about the mid-caps this week. On a week-to-date basis itself, the mid-caps have put up around a 1.3% in terms of gains at current reckoning. We also have the BSE Small Cap Index, which has gained on a week-to-date basis. So let's see whether that maintains or not. As of now, there is more or less a consolidatory kind of pattern for the markets at this point in time. But like we saw yesterday and in the past couple of trading sessions, there's a lot which is taking place below the surface in terms of the markets. We have Adani stocks, mid-cap pharmaceutical stocks, metal stocks, Bharti Airtel, a lot which is buzzing around. Hi, Sonia.
Hi, afternoon. In fact, I was just looking at the headline index. It doesn't speak so much about what's happening beneath the surface, right? So the index is still quiet. I think what's happening is the steam that we saw in the last 3 days, some of that is coming off. There's still a lot by way of global data that needs to come through, especially the jobs data that could give us an indication of whether the Fed will continue its aggression in terms of rate hikes. There's a meeting, FOMC meeting at the end of March, and up until then, I think the market could remain in a range because the Fed is expected to be more aggressive. Higher rates for longer is the mandate of the Fed. So up until that takes place, I guess the market is going to be within that range itself, 17,400 to 800. The good part is that there are a lot of these beaten down stocks that are making an attempt to come back, whether it's the Adani Group stocks, whether it's a couple of the infrastructure names as well. So all is not lost. But yes, the rally that we saw in the last 3 days, that has come to a halt for now.
Okay, well, maybe just about a breather at this point in time for the markets. But let's get talking to the first company that we have on our radar this afternoon. Kaplan Point is the one that we're talking about. The company, in its latest exchange notice, has said that they have received a US FDA approval for thiamine hydrochloride injection. Thiamine hydrochloride basically treats vitamin B1 deficiency. Not only that, the company, including this approval, has received 3 approvals and all of them injectables just in the past 1 month from the US drug regulator. To discuss this and more in terms of the business, we have with us Vivek P, who is the COO of Kaplan Point Labs. Vivek, hi, welcome to the show. Well, we haven't spoken to you post your Q3 numbers, but I wanted to start by discussing these 3 approvals that you've received in the injectable space just in the past 1 month. They're not that big in terms of market size, but it's probably pointing to a lot of approvals possibly coming through and a pipeline of drugs that we might see for Kaplan Point. So tell us, what can we expect going forward?
Yeah, so we're quite happy with the recent approvals. Of course, there was a bit of a lull period in the last 1 year where we didn't receive too many approvals, but that was a blessing in disguise for us because we actually milked a lot more out of the existing approvals that we have. We've been consistently gaining in market share with the products that were already approved. But now that with the new approvals coming through, I think we can really kick on into extra gear from here. Like you said, these are not very large products that are getting approved, but that's sort of within our sweet spot. We don't want to go after only products that are over $1 billion in revenue or anything like that. We want to have a wide portfolio of products. Our offering needs to be broad-based against multiple therapies, so that anything that goes through a hospital would need to go through the range of portfolio that we're developing at this point.
Okay. Vivek, hi, good afternoon, and thanks for being with us on the channel. Earlier, I think you had aimed for achieving 200 crores of sales by the end of FY23. Are you on track to do that? And what about FY24? Considering that, you're sounding very optimistic, what could the growth in FY24 look like?
We are certainly on target to complete 200 crore plus this year. You'll have to wait for a few more weeks and see. But for the next year, we've set ourselves a bit more of an audacious target where we feel that we can still grow another 50%. With the approvals that are likely to come through over the next few months, I think we should be in a position to close next year at about close to 300 crores in capital steroids revenue.
Okay, so 300 crores is what you're probably projecting for Cipla Steriles. Can you tell us what might be the biggest risk to Cipla Steriles in the US market now? Because, I was just having a discussion with somebody with regards to US price pressure, and they said that it is significant. What is the kind of price pressure that you're probably facing in the injectables market, in the markets that you are currently in the US? And what might be the expectations on US price pressure going forward as well?
Yeah. So in terms of pricing, to be honest with you, for many of the products where we are working on, already it has bottomed out to a certain extent. In fact, you'll be surprised to find that many of the products that we are already in the market with and some of the new approvals, we start seeing a little bit of an uptick in pricing. And also what constitutes to a pricing pressure for a larger company might not really be what we would call as low margin products or anything like that, because obviously we come from a smaller base as well, and our expenses, etc., are different to some of these larger players. So overall, I would say that if you net off our EBITDA outside of the R&D and many of the facility fees that we are paying, our EBITDA margins are very similar to our parent companies, which is already at a slightly healthy level, I would say. So pricing pressure is there. I would not say no, but I would say that many of these products that we are talking about pricing pressure is largely bottomed out.
Okay, pricing pressure on many of your products is largely bottomed out. Just to come back to the numbers that you were giving us, Vivek, you said you'll end FY23 with 200 crores and FY24 with 300 crores. So that's a 50% jump that you're looking at in revenues between FY23 and 24. Will it largely be organic, or are you looking at some inorganic route as well? Because you do have cash of over 700 crores on your books.
Right. So whatever that we are talking about is organic. See, you'll also have to understand that we have been significantly investing into R&D for quite some time now, right? So what you're seeing in terms of growth, obviously on a lower base with regards to Cipla Steroids, that's why last year to this year is likely to be about 70%, and then 50% hopefully next year is big. It's the fruits of all that we've invested into over the last 4 to 5 years, and hopefully we see more of that going forward from here, because we've also been expanding capacities as well. So this is not just the R&D coming into play. This is our consistent compliance record, expansion of capacities, and some of these products that are getting approved that we filed over the last few years.
Okay. Can you just give us a sense in terms of what the compliance status of your plants would be from where the injectables are filed?
Yeah, so we are still waiting for an audit to happen post-COVID. The good thing is we might be in the good books, I guess, because they've not yet prioritized our plant. But some of these very large plants as well that are into injectables also haven't been audited recently. But the mantra is that we need to be in a state of anytime readiness when it comes to US or any other inspections for that matter. So I would say that, the sooner they come, the better, but we need to be in a state of anytime audit readiness.
Okay, so you haven't been audited since, say, 2019, 2020. Is that correct?
Correct. And we're not alone. I think there is a significant backlog with regards to FDO audits. And obviously, recently, all of them are unannounced audits or very short announced audits, right? So we don't really have an idea of when it will happen.
Okay. All right, Vivek, thank you for stopping by and speaking to us, and all the best with your growth plans. That is Kaplan Point. They're looking at completing this year with around 200 crores on their books in terms of revenues. That could grow to 300 crores in FY24, which is a 50% jump. And they're saying that a large part of it, almost all of it, will come through the organic route itself. So that's Kaplan Point Labs. Let's do one thing. Let us now get a look back on the markets and tell you what's been happening there. So far, so good in terms of a move on the market. I mean, it's still down, but not out, you'd have to say. Down about 70 odd points. Let's take a quick break on that note. Here's a quick programming note. On the 14th of March, CNBC-TV18 will host what will be India's largest summit on gender parity in Delhi. Women leaders from all walks of life will come together to brainstorm and help take decisive steps to bridge the gender inequality that exists in India and across the world. The event starts at 4:30 p.m. on the 14th of March, and you can catch all the live action right here on CNBC-TV18.
Welcome back. Well, for the markets, it is trending a little lower for the Nifty. So we're down around 0.5% currently for the Nifty, down around 79 odd points. We have the Sensex also, which is shed over 240 odd points at this point. Just watch out for a couple of stocks. So we've been talking about how a lot of the mid-cap pharma stocks are buzzing, and one of them is Sequence Scientific. That particular company is in focus. The company has terminated the acquisition of Tineta Pharma Private Limited. This particular acquisition was announced in November of 2022, and the acquisition was under a share purchase agreement, which has not materialized. Now, this particular company is an India-focused livestock company. The acquisition was for an enterprise value of around 218 odd crores. It was going to be paid via cash consideration of 153 crores and a preferential allotment of 65 crores. And was expected to close by this quarter. Now, the company had already indicated in the previous conference calls that they held that the acquisition closure was dragging a little bit. Now, why exactly is the stock up 12% despite this acquisition not going through? Because it seems to be more of a relief rally because the company's fundamentals have been stressed. For example, the stock is down over 50% from its 52-week high. As of Q3, the company continued to make losses on the bottom line. Losses were for the third consecutive quarter. There were single-digit margins for the fourth consecutive quarter. Margins were below 3% for the third consecutive quarter. And as of Q3 of FY23, their net debt had risen to 363 crores versus 340 crores in the previous quarter and versus around 254 crores that they ended FY22 with. So that gives you a sense in terms of the company probably stretching itself to make this acquisition, and the street is probably of the view that it's good that it didn't happen and maybe the company needs to concentrate on strengthening the fundamentals.
Okay, and I guess there's a big relief on the stock. As you can see, it's up almost about 12%. But let's move on. Power sector PSUs have outperformed in 2023 so far owing to various reasons. There has been a significant demand in the sector in the last 1 month. Vivek is here with a talk on the power sector PSUs and how they could continue to be in focus. Vivek, over to you.
Well, the power sector PSU stocks have actually outperformed in 2023. With so much news flow regarding the rising demand and the government invoking an emergency clause, here is a deep dive in the power sector. Demand has been quite strong and growing in February, with peak demand constantly breaching 200 gigawatts on a daily basis. When you're talking about what exactly is causing this particular rise, it's a double whammy of heat waves, and the El Nino impact is expected to keep power demand quite high. The anticipated higher demand has prompted the Ministry of Power to invoke an emergency clause in the Electricity Act to support imported coal-based power plants to restart and to allow a cost pass-through. Generation trends too have remained quite strong in February 2023, with generation growth for February 2023 at 7% growth on a year-on-year basis. When you're talking about the PLF trends, they too have remained very strong in FY23. Now remember, PLFs were at 63.7% for the period of April 2022 to January 2023 versus 57.4% in the same period last year. When you're talking about pricing, that too has remained very strong and is expected to gain further ground going into the summer season. Merchant power prices gained 8% on a month-on-month basis in February 2023. Now, talking about the power sector stocks, why have they done so well in 2023? It's a combination of factors. Number one, utilities are seen as a defensive, high dividend yielding bet in a volatile environment. Now, when you add that with improving fundamentals like increasing PLF, Lower discom dues, easing supply chain constraints, these two add to the positive sentiment. Brokerages remain quite bullish on all of these PSU power stocks. In fact, all of the brokerages have a positive stance on NTPC, with HSBC having a target price of 205 rupees a share. Citi too is very bullish on the prospects of Power Grid, with a target price of 275 rupees a share.
All right, thanks a lot for that. That's a deep dive into the power sector. Let's slip into a quick break. On the other side of the break, Sudeep Shah of SBI Securities will be joining in. He'll get us some trading strategies. Do stay tuned in.
Welcome back. Well, for the markets, it's the Bank Nifty which is sluggish, so down around 0.2%. A couple of these financials are losing ground at this point, so just watch out for a couple of these stocks which managed to gain in yesterday's trading session. Something like an IndusInd Bank, which was one of the top gainers yesterday, is losing some amount of ground today, so that stock is down around 0.5%. And a couple of these IT stocks which have lost a little bit of ground, other heavyweights such as Reliance, ITC as well, in the red, down around 1.5% each for these heavyweights. Sudeep Shah, Head Technical and Derivatives Research at SBI Securities, joins in now to discuss what he's strategizing today. Sudeep, hi, welcome to the show. Well, it might be more quiet on the index front, but there's a lot of stock-specific action. So how would you approach the markets today?
Absolutely. Good afternoon, Ekta. We are seeing some kind of a consolidation today after yesterday's, big move from the lows of the day. And now, what important is to map it with the global markets. Now, global markets have once again gone into sideways consolidation, and we have seen some negative news pertaining to inflation coming out. So, considering that, what the Indian markets are doing, they're in a way outperforming, and from the lows of 17,400, a move to 17,800 in a matter of 3 days. So index is taking its time, it's consolidating, and I feel it could consolidate for a day or two going forward also. And what I feel is the mid-cap side of the markets could give us some more surprise on the upside, because mid-caps have not only bounced from its 200 DMA, they have also managed to cross and sustain above its 20-day exponential moving average. Now, so that is the reason I feel that from the current levels, although there could be some, we'll have to pick and choose within the mid-cap space also, but at least that selling pressure in mid-caps is now reducing, and I feel in the next few sessions, even though index would be in a range, we would see a good setup, we would see a good up move within the mid-cap space.
Okay, so are you looking at any individual stocks? I mean, there's lots buzzing in the mid-cap end today. I was just looking at some of these names, PNB Housing Finance, there's Bosch, by the way, which has hit a fresh 52-week high. In fact, several stocks, REC, PFC, a lot of the PSU names at 52-week highs. Anything that you like in the mid-cap end?
Absolutely. Good afternoon, Sonia. Last time when we had interacted, we were very bullish on the CPSE space. We had PFC as our top pick, and that stock has outperformed way ahead of our expectations. Now, what we feel is that within the CPSE space, Power Grid is one name which has not moved that much from the current levels of 227, 228. It's sustaining above its all moving averages, and it's trading at its last 2 to 3 months high. So I feel that this stock can be looked at from a short to medium term perspective and can be bought with a stop loss of 221 for a target of 240. And apart from Power Grid, another pick which I feel could outperform is Indian Hotels. Now, of late, we have been seeing a decent buying in these hotel names, and the top pick is Indian Hotel. Now, this stock chartically has given a symmetrical triangle breakout, and it's trading at its 3 months high now. And in the last 5 sessions, from a very short-term perspective, the stock has witnessed a higher top, higher bottom formation and is trading above its key moving averages on the daily as well as weekly time frame. So I feel that this stock can be bought with a 321 stop loss and a 343 target on the upside.
Okay. Just wanted your thoughts, Sudeep, quickly on the entire mid-cap pharmaceutical space. That seems to be an entire section which is very active today.
Absolutely. So we've seen some good moves from, say, Granules, Syngene, but the top pick we feel from the mid-cap space would be Syngene right now, because from the mid-cap pharmacy, if we see a lot of these pharma names, they've started to just hold on to their lows and start a tad bit. They're just trying to move higher. So within those charts, I feel Syngene would qualify at least from a short-term trading and an investment perspective. Rest, still, I feel that it's just early days, the first couple of days of initial moves. So I feel we should be a bit skeptical getting into these names right now. When we are getting good names like PSU banks, say CPSE stocks, so there's a lot more to choose from.
Okay, there's lots more to choose from. Got that. Thanks a lot for joining in. So PSU banks, PSU stocks in general are your better bet if you are looking for a trade. Let's slip into a quick break. On the other side of the break, Manisha Gupta will be joining in. She has with her Anuj Gupta of IIFL Securities. So stay tuned for that.
Welcome back. Joining us on the show now is Anuj Gupta. He's Vice President, Research, Commodities and Currencies at IIFL Securities. Anuj, hi, good to have you. And what we want to talk about today is the soft commodities, because there are weather concerns, the evolving El Nino. These are some of the things that have kept the market prices on the higher side. But for the Indian markets, we also have seen a big correction come in for the wheat prices from its all-time highs. Even sugar, as it's trading near 6-year highs in the international markets, the Indian markets have seen some decline as well. How do you look at the weak demand during Holi playing on to all of these prices?
Manisha, good afternoon. We have seen wheat prices are on correction mode as a government has released a big quota for the open market, and after that we have seen almost 800 rupees kind of correction in the wheat prices. So, however, we have also noticed that due to this warm weather, we are expecting a little bit correction in the production side. But after that, we are also seeing that wheat prices also correcting in a last 10 or 20 days due to this increase in the quota. So still we are looking towards the towards that wheat prices may again correction, because new crop will arrive in next couple of 15 days. So after that we will see prices may correct again. But on that sugar side, as the monsoon is not on the page, and we are expecting that due to this El Nino might be there is some below normal rain may be seen in the monsoon season. So that will also impact the sugar prices, and due to this we have seen sugar prices increase in the international market very sharply. And also we have noticed that due to this festival season, Holi festival season, sugar prices also increase in the domestic market. So overall we have seen here the commodity prices were trade on a different mode, where we are seeing that wheat prices are going down and sugar prices trading on a higher side.
Okay, all right. Anuj, thanks a lot for joining in. Sorry we had to cut it short. Manisha, thanks for joining as well. We have to cut across to our editor.